Welcome to the Investors Trading Academy event of the week. Each week, our staff of analysts and educators tries to provide you with a better understanding of a major market event scheduled during the next week. This week, we'll take a look at the upcoming year. As we wrap up 2014, markets are still dealing with many uncertainties. There's Ebola and Vladimir Putin and Islamic State terrorism. Western Europe is back in an economic rut. Japan's recovery is faltering again, and China looks as if it's headed for its slowest growth since 1990. But there are good things happening too. The US as a whole is emerging as the most likely candidate to power world growth in 2015. North Dakota is crazy busy with shale oil production. Seattle is swamped with Boeing orders. In Silicon Valley, Apple is selling tons of iPhones. New York City has more jobs than ever. Consumers are spending like crazy and gasoline prices have fallen under $2 a gallon. Fights over taxing and spending will probably heat up next year, especially in the Eurozone, where France and Italy are clashing with Germany over how big their budget deficits can be. The European Commission in Brussels allowed the French and Italians to run oversized deficits in October, but warned that all Euro countries will get an in-depth assessment in mid-November. Germany's insistence on austerity makes it hard for Euro nations to spark economic growth. In the US, fracking and horizontal drilling continue to exceed expectations, raising domestic crude oil production more than 50% in just 4 years. Not only has the oil and gas boom shrunk the US trade deficit and lifted the economies of Texas, North Dakota, and other oil patches, it's also boosted consumers and the manufacturing sector. As a bonus, falling oil prices have diminished the power of countries such as Russia and Iran to finance troublemaking abroad. Iran's government runs deficits when Brent crude drifts below $138 a barrel. For the US economy, the most critical unknown is whether 2015 will be the year the Federal Reserve finally begins to raise the federal funds rate, which is locked at 0 to 0.25% since the end of 2008. China is suffering its own brand of deflation. Wholesale prices have fallen every month since April 2012. Although President Xi has vowed to promote consumer-led growth, which would please the public by raising living standards, his efforts have fallen short.